How's it going, everyone? My name is Derek Afasi, and I just want to discuss with you briefly life insurance quotes and how to get the best life insurance quotes and life insurance rates in your specific area. Basically, with life insurance, if maybe you've seen an infomercial on it, maybe you've kind of done some research online, it comes down to two major sections. It either goes with term insurance or permanent insurance. So one of the things that we do here at Afasi Financial Group is we're an independent agency. We say we leverage every single company, every single carrier out there, and we make sure that your goals are met specifically. So the different things that would qualify life insurance from being very inexpensive to very expensive comes down to a couple different factors. You have your age, so obviously if somebody's older, on a mortality rate speaking, they're closer to death. So therefore the insurance companies are going to be charging them higher premiums if somebody's 65 years old as opposed to an individual that's that's applying for life insurance that's 25 years old. The 25-year-old with the same sort of plan that's healthy, that's non-smoker, is going to have a lot of better rating than somebody that's obviously older. So you have that age as a larger factor. You also have the health. What sort of ailments do they have? Do they have a sort of ailment that maybe they've had cancer in the past? Different things like that. That's something that the insurance companies take into account to make sure that, okay, is this person acceptable for our standards? And that's one of the things that we try to help you out with. Depending upon what sort of ailments you have one company that works really well for somebody with diabetes. With the other company, it might be a diabetes is a decline, or somebody that had colon cancer would be acceptable because one company understands that risk better than the other 100 companies. So that's some of the different things that you're going to get out of our agency, is make sure that first and foremost, we're going to decrease that price as much as possible, and then make sure that your quality is as high as possible. So based upon your specific criteria, based upon your goals that you're trying to accomplish with the life insurance, how exactly can we make sure that we're placing that square peg in a square hole, not a square peg in a round hole? So the other thing is sex, male or female. Males live shorter lives than females. So therefore, females have typical cheaper rates than males do. The very last thing is the goals. If you have a short-term plan, a lot of times that could be handled through term life insurance. So if you have maybe a mortgage, a 30-year mortgage, what a typical person would think and say, okay, I have a mortgage of $300,000 for 30 years. Well, let me just get a 30-year, $300,000 policy. And where we try to help you understand it is you could actually accomplish and save hundreds upon thousands of dollars every year by leveraging something known as a laddering strategy, meaning you have a 10-year product, you have a 10-year life insurance policy, a 20-year life insurance policy, and a 30-year life insurance policy. The 10-year would be for $100,000, the 20-year would be for $100,000, the 30-year would be for $100,000. So what that happens is initially you're going to have $300,000 worth of term life insurance that might cover that specific need of a mortgage, for example. After the first 10 years, you're not paying for $100,000 of life insurance because your debt for your mortgage is now only $200,000. After 20 years, you have 10 more years remaining of $100,000, and it's going to match it up precisely. So doing that, it's a lot more cost effective than going on a full $300,000 30-year term, because when you're in year 29, you still have $300,000 of coverage that you don't need if you want to match it up precisely to a mortgage. So little things like that are little tricks on how you could save hundreds upon thousands of dollars. The very last aspect is permanent life insurance. Some individuals use permanent life insurance as a sort of retirement play, wealth accumulation play. In particular, if you're looking for a quote, my recommendation is you could leverage something known as a GUL. It's kind of like a permanent term life insurance, where it's a term life insurance out to age 121, or it's a permanent life insurance that does not have the cash value cost associated with it. So those are some just different little neat techniques, little neat tricks that I just want you guys to be mindful of. At any point in time, if you found value in this video, please feel free to give our 1-800 number a call. It's 1-800-566-1002. Make sure to subscribe to your YouTube channel, Retire Sharp, so you can have access to the most updated videos. Thank you so much, guys.